This is step index on a 4-hour time frame. The key PD array, which was used as a resistance in the beginning of the week, is now being turned into a support. That is the idea that I'm going with in this contrarian model, approaching the 20th reversal. All right. So let's hop into the 15 minutes time frame and let's see what happened. All right. I have a 5-point of a stop loss, and my stop loss, if you can see it, it is below the 15 minutes time frame fair value gap. Why did I choose that fair value gap? Well, the fair value gap is in conjunction with the 4-hour time frame key PD array. They are congested levels. So when you hop into the lower time frame, you want to see that particular display of price action. This price action here, this fair value gap on the 15 minutes, this tiny one, it is an efficiency from the previous day's expansion. We expanded using the 15 minutes time frame, tiny fair value gap here, expansion higher, breaking structure here. That's our market structure shift. We have our displacement leg. We are now retracing back into the New York inefficiency. This is the fair value gap that we are supporting on in the lower time frame. So I have a 5-point stop loss, and if you notice, I have a lot size that is bigger than the normal one that I'm used to. So this one is a lot size 2. I am basically increasing the risk. Okay, this is a high probability trade condition, and I want to capitalize on the expansion going higher. So I have about $1,000 of profit if the market provides me with a good opportunity to support on this fair value gap on the 4-hour time frame. The moment of truth. Well, today it is the 19th of September 2025, and the previous video that I posted was an analysis for the Contrarian Trade Setup. Well, I had spoken about the aggressiveness of price action when it's near the 20th of each month. Well, there are other confluences that we have to divulge in this price action. Well, I spoke about the aggressiveness, which was the number one criteria for our 20th reversal profile. We need to see that aggressiveness. It is typically aggressive. That is the number one characteristic of trading the 20th price action. Number two, it is relating to the market structure itself. Since we are contrarian, we need to see the market break structure in the opposing direction. I will take you guys to the market structure shift, which occurred with today's price action on the 19th. Well, I was looking at this fair value gap as a support structure once we go above it and close above that particular new week fair value gap. And I expect price action to come back into the new week fair value gap to give us an opportunity to send price higher. Well, we don't see any particular fair value gap in the 4-hour time frame. That's why we have to go into the lower time frame. When we get to the lower time frames, we want to see supporting structures that give us an idea as to our narrative in the daily time frame. We want to see ideas that work in conjunction with the higher time frame. All right, so let's hop into the lower time frames. Well, this is the 15 minutes time frame on step index. Well, down here we did a liquidity purge. We swept those particular relative equal lows and we displaced higher aggressively. We have fair value gaps that remain open. We like to see those fair value gaps remain open in the 20th price action. All right, that is the characteristic for it. It tends to be aggressive in its delivery. So I liked this, or all these fair value gaps remaining open. But the New York session fair value gaps, I want to see those inefficiencies being retraded back to. This is why I like to watch the New York fair value gap. So we have come all the way down to support on the New York fair value gap of the 18th. All right. Remember that price action was in expansion. And the New York fair value gap as well, we want to see price action coming back into that particular support to give us an idea, or to give us a setup to send price higher. Now, if you were not part of this particular long position, well, there's no need to worry, because there was no indication of price wanting to go higher. Buying the support on the 18th of the New York fair value gap is a bit risky. Okay. The reason why I say it is risky, it is because there is no confirmation. All right. Price is still resisting at the new week fair value gap, and it is going down to just go long based off of the New York fair value gap. We need confirmation, good people. And if you look at the commentary for September, I gave you those confluences that we can use in conjunction with price action. And number one on the list, it is displacement. We see displacement supporting on new week level, supporting on that New York fair value gap of the 18th. Price rallied aggressively on the upside. And when did it do that? It did it on the New York session opening. Okay, we have a big fair value gap on the 19th. I love trading the New York session. So we have our first confluence, which is the displacement fair value gaps. Number two is that we break the market structure. We break structure up here. We close above this particular high. And we have come back into our inefficiencies. Good people. This is a beautiful long position using the 19th September 2025 New York fair value gap. Well, I talked about PD arrays that support the higher time frame new week fair value gap. Well, which fair value gap is closer between these two? Which one is closer to the new week fair value gap? This New York fair value gap, it is nested with the new week fair value gap. So we use PD arrays that are in close proximity with our higher time frame key PD array. And I'm anticipating that price action will aggressively move higher and possibly reach into my target. My target is like 50 points. Okay. So I have all the confirmations that I need for this particular reversal profile for this September. As price goes higher and higher, of course, I will add on to my position, as I like to pyramid. And the way that I pyramid, I will show you guys maybe in the next coming videos, because step index tends to give out a lot of opportunities. So you have to learn how to pyramid, and you have to learn how to do it safely and not wreck your account. Okay. So as price moves away from the new week fair value gap, it will come back to offer you another opportunity. So in case you missed the New York fair value gap of the 18th, well, there's no need to worry. You just wait for the next boss, which is the New York fair value gap of today. So along the way, you will have countless opportunities. Okay. There's no need to worry, because this market will give you a plethora of opportunities. Just make sure that you use the correct sizing into your pyramids. Okay. So with that, I will leave you guys to watch how Step Index delivers with the 20th price action. Good luck.